Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday evening, and we're at July 30th, 2020, 6:40 p.m. Central Time. Well, the stock market up, and you know why? After the close today, we saw the earnings in Alphabet, Amazon, Facebook, Apple, Ford. I can go on and on. It was company after company. You're in the heart of the earnings season, and these tech companies are on a blowout. Apple's going to, again, have a stock split. So they're going to go 4 for 1 now. So they're going to reduce their price. You know, it's amazing. The others seem to think it's classy to have their prices way up in the sky. I think Apple's onto something that these other companies might study. When you take a look at the markets, I want you to look at BZU. It's already open, but that arrow, or right here, the clock, tomorrow's the last trading day in the September. I know we're in July, and it seems crazy to you that the September contract is already expiring tomorrow. I don't set the rules. We're going to replace it with October, just so you can be aware of that. When you look at interest rates, you do realize you're right on the doorstep of historic lows, closes in the 10-year note. You're back down to the 5, 4 and a fraction numbers. So got to pay attention to what's going on. My read yesterday on the FOMC meeting was that the 10-year, 20 years, 30s, those are the ones I think the Fed's going to be looking at. They didn't talk about caps on yields, but I think if they put their mind to it, they can cap those in a way with money. Metal markets getting a bounce. Did they get cheap enough? I don't know. But boy, what a rally we had in the euro today, and a break in the dollar index. Now, today was an interesting day if you're a subscriber of mine. Big day, right? All right, so let's go to the charts. By the way, they're not all big days. There are days where you get beat up. Today was not it. All right, the weekly area chart of closes. Look at how the markets come up. It's rather dramatic, right? For the week, we're up another 63 points. I want to show you something. Do you see what's behind me here? In the mornings, I go through all this and even more. And what I do is I cover the day's events and get my traders at 5:30 in the morning, a.m. Central Time. I start recording. I get them ready for the day's events. I show them what's coming up for the day, and that already is written for tomorrow. I'll add to it a little bit for everybody. But I show them what's coming up, what's moving the markets. I certainly don't know what's going to move tonight, the market, yet for Asia and Europe in the morning, but I'll fill it in. I already know the reports for tomorrow, what the market's looking for. Do you get that from your broker? I doubt it. Do you get anything at the prices I offer like that? I don't think so. And that's what it's at. I'm after the mass. And that's what I try to feed on. I try to teach. I love teaching. And no, I'm not a teacher. Have I taught trading? Yeah, I did it for a bunch of the major colleges from Northwestern on over my career. Okay, and I'm talking when I was a young man, much younger than this, on through it. I used to spend time and join in and help younger people. And I've enjoyed it all the way through. Okay, so as I take a look, you can see the nice rally that we had, picked up over here, had the big break, and we've stayed within this. You do realize the whole thing in this market is from the break that we had right here into this March period. We haven't come out of that. We have now spent the better part of April, May, June, and July just trading within that band. I hope you appreciate what that shows you. When you come here and you start looking at the market on the daily bar chart, you can see the price action. This is a chart with no studies. The first thing I put on every chart is my swing line study. It's unique to what I wrote. I created the study. It's in our charting software. And the whole concept of it is 5 rules that tell you where the line is drawn today from yesterday. That's all it is. And from there, you determine, are you trending, and what is the risk associated with the trend? Is the trend up, down, or no trend? My definition of where we're at in the S&P right now is no trend in this pattern that we have. We now have a pattern that's got a higher high, but it made a lower low at the same time. That's not a trend. Where's the support for the market? And where's the bias come in? Well, the first support's right here, the 18-day average of closes. I call it 18-day MAC, moving average of closes. Your other averages are down here. The market's what I call the line in the sand, right at that zone. You'll hear me tell you over and over, until you break these patterns, they're solid. And so far, challenges of the 18-day average have been okay in the month of July. That's about all that you can say in the month of July. There's other chart patterns that have been better here. I'm concerned that we're starting to go sideways. I'm concerned that if the market fails on this upper Bollinger Band, maybe it's saying that, hey, dog days of summer, we want to slow down a little bit. We get the weighing forces of COVID picking up through America, picking up in other parts of the world. That is not good. The good part is the tech stocks are still doing exceptionally well for us, but what about everything else? Don't know. So I look at how the market's playing out there. When I look at where we're at in momentum, we're overbought. So I have a market with no trend, going sideways in the short term. I realize the longer term trend is up. But when you trade futures with this leverage, you got to start paying attention to the other trend. You're overbought. Resistance comes in at 32.90. When we come to the Nasdaq, here's something that I've noticed, and I've shared it with you all the way through. Each challenge in this of the 18-day average has been where the market has basically stopped. It has not been able to pick up momentum and get away from it. It's no different this time around. In fact, today, this threw out another buy signal. If we take a look X today, you had a pattern of lower highs, lower lows. The only thing that could have changed it is getting through 10,758 and not getting back under these lows. The market accommodated it, got under the low, but not this one. Didn't take that out. You had an outside day up, and tonight you're following through. Why not? You see all these big tech names that make up this index, they've soared. Momentum up, trend up, look for resistance. I think at the first challenge of the upper Bollinger Band, 10,965, support back at 10,694. Sideways action in the S&P, in the Dow rather. Look at how you're just sitting here, just drifting. What number are you drifting on? This one. Not the same pattern as the Nasdaq. The Nasdaq has the advantage of all these tech names. You don't have that in these. Maybe we'll get it into other parts of it, but typically they're industrials, and they have not had the same play as you can see, and that's interesting. What negates the downtrend? Taking out 26,599, we'll see where the support comes in. In the Russell, out of nowhere, this market's getting better and better. Number one, I look here to see what we're doing. Tonight, you can't count. So let's get rid of today's action on that. Let's go to a Thursday. Both numbers over 80. The day before over 80, not there. If you're going to embed, which means you convert from being overbought to locking in an uptrend, that will happen with a close tomorrow that's on the strong side, and you get that 3 days in a row of the upper of the market embedding. What suddenly went on? I'll tell you. The 18-day average is moving right up to see the stash line here? The 200-day. And as it's doing so, the market, at least right now, is saying, I want to be bullish. And a crossover of the 18 over the 200 gives the traders what they want with an embedded rating. I think that that's a pretty strong signal if it kicks in, and I'll be looking to see what the upper Bollinger Band can be hit on a target. Yay for me. I had told you back here that I thought the pros, right here on the first challenge of the lower Bollinger Band again, here it is, and it hits it. I thought they wrote puts with the idea they could get back to the, 18-day average of closes. Now, I don't know if they held on through the FOMC meeting and everything else. What I can tell you is the market never put them under a lot of pressure. And watch this. Missed it there, comes back up, and today it hits it. It just missed it here, and they might have gotten out there. There's no reason they didn't come out today if they were still in that trade. So, yay. Again, each time it's been doing that recently, it's been paying off. I don't know if it'll continue to do that, but I picked up on it. I've been telling you about this for a whole year as this pattern has been showing itself. In the T-bond market, you're still bullish here. And I realize, and I brought up to how many firms we're talking, we're going to see higher interest rates by year end. That's not what this chart is saying. This chart is still very much locked into, at least at this point in time, that isn't the case. You've got higher lows, higher highs. Mortgage rates, I think you can look at them. They're going to start falling on you again if these markets stay like that, especially with the 10-year. And if you break out of this, if this turns out to be a base and the market pops on you, you might go to a quarter point. I know it sounds crazy. You could do that back to the 0.31 that we challenged on the March fiasco break when people panicked. You could be into that if this does that. Something that you have to watch. This is that gorilla glue trade. You're just locked in on the lower Bollinger Band. When the pattern breaks, it breaks. It hasn't yet. What else? Eurocurrency, up and away for the moon. Now, the euro today fell enough right in here. Let me just take you to this. This is today's action Thursday. It fell enough where I think the pros were able to step in and buy this market. I think they bought it in the 117.40s. And I think they kicked out today late in the day against the upper Bollinger Band. Doesn't mean you can't go higher, you are. But I think that was what we'll call, quote unquote, what they'll think might have been the easier money. Now, I was surprised to see this today. We had 4 days in a row up in the Japanese yen through yesterday. You snuck out a higher close today. Right at the end of the day, it was flirting under it. Now, are we going to embed? Looks like it, doesn't it? So, on pullbacks in this market, let it get away from that Bollinger Band to the downside, just like in the euro. I think those spikes down are going to get bought. This market's telling you that the trade is not comfortable with what they're saying. Why would you buy the yen unless this breakout, and that was a breakout when you came out of this pattern, I showed it to you, and you've run to the upside. Bitcoin probably got a bit too high up here. Now it's getting distribution of price. It's still bullish. Until you lose the embedded reading, you're not fighting that. You're looking on the pullbacks for reason to buy. If you lose the embedded reading, then maybe you get back towards that 10,000 level. But right here, no, 11,475. How accurate were we when I started bringing to you in March? And I kept saying, you're going to get that halving incident happening in May, where the same effort on the miners only produces half the amount of coins, and the people that love Bitcoin will say there's less supply. That's what basically took place. All right, if we take a look at this, you've got to move to the October. I spelled this wrong. I just did this before. My spelling error punished me, but I saw it at least, maybe before you. October, Brent versus WTI. Let it settle in and the SEP go off the board. I don't know that that's how realistic, $3.10, that it spiked up like that. As this goes off the board come Monday, I'll have a better feel for what that does. And I say that because you're still very much caught in this sideways action here. I'm still in the SEP crude here. I might have to move you to the ox. I like one against the other. The trend is down here. Resistance is the 41.13 level. I wouldn't be surprised if the pros sell that with stops over the 42.12 zone. Gasoline. The market's in what I call these pipes, but the resistance is pretty clear at 123.40. You wouldn't want to see it over 125.81. And in that gas, nah, I think the pros bailed in big ways against the combination of the upper Bollinger Band and the 100-day average. I think the smart chartists, quote unquote, the word smart, whatever that might mean, I think that that's a lot of resistance for them. They recognized it and they probably stepped out. I can't tell you they did, but that's my guess on what they did. You know, one of the things I do, and I think you're aware of this, I wake up pretty early in the morning and I put out a morning subscriber video. In that video, as you saw, I cover the first thing in the morning, the fundamentals that are going to impact the market for the day. I'll bring you up to date on what's going on in Asia, any key numbers that we should be looking at. That'll include Australia, New Zealand, all of China, Japan, you know what I'm getting at. Then Europe, I'll bring you in and bring you up the European economic data, what I think could impact you for that. Then the U.S. reports that are coming out and what we've got on the agenda. From there, we go into full chart analysis. 40 charts covering every sector, all the major futures. I'll throw out buy ideas, sell ideas, where I think you make your move in the market. I'll refer to my full research, which I write twice a day and send out to my staff and my paid subscribers for a different level of research, and I'll bring them in the morning. Typically, when I put out my written, which I put out in the evening, a lot of people take both. They get the whole package of what I'm doing. I'll bring up to date in the morning fills that I might have got off that overnight. So just give them a refresh, because again, they're getting this morning subscriber video, just a bigger package with it. Pretty important package. How do you find out about all this? Just go to my website. Under the word research, it's all there. You'll be able to deal with it from that point. It explains everything. You buy everything right there. If you have any questions, call my staff. We've noticed we've had a phone problem. We know it. But if you leave a voice message, they come to me, and from the voice message, I'm able to relay it. I can't get in and change it. We've got the phone, our phone purveyors, if you will, working on it. We don't know how to fix the problem that's there. With nobody in the office, it's never easy. I'm Ira. You have a good day, and I will talk to you tomorrow.